Okay, so trend following is a very, very powerful technique. Yeah, it's been around for ages, but it's only profitable and powerful when the market is actually trending. So if you apply a trend following strategy to a range sort of a market, then it's not going to work. So in this lesson, we're going to define a trend, and then therefore we're going to learn when to trade the system, and then most importantly, when not to trade the system. So Dow and Elliott, those are the guys who really started the whole trend following sort of systems. So this is why we use their definitions for trends, for the objectifying the whole system. So Dow and Elliott, they both agree that the market goes into different sorts of waves before deciding a direction. So there are actually three directions that the market could go. Yeah, it's one is up, the other one is down, and then also it could go in a sideward direction. And there are, according to Dow, there are three various types of trends. One is a secular trend, and this one lasts for about 5 to 25 years. So an example of a bullish trend, like a bullish trend is when we are buying, when it's going up. The example of a bullish trend is the US stock market. And that was bullish since 1983 all the way up to 2000, or you can even say 2007, just before the credit crunch. We can easily spot a secular trend on the weekly chart. This shows us approximately 5 years worth of data. So if you want to see more, like we know that the secular trends are, if it could go for 20 years. So if you need to see more data, which we probably don't, but then you can drop to the monthly chart. But for me to look for secular trends, I look at the weekly chart. So one of my favorite examples here of a bear secular market. The bear market is when it's going down, and because it's secular, it's been going down for like 20 years or so. So one of my favorite examples of a secular bear market is the gold market since 1980 to 1999. Yeah, just before the year 2000 or 2003 as well. You can include that. So prices here comes down. This is prices coming down and then up and down. You can say it's sort of a range, but the thing is that prices comes down and it makes a 40-year low year on the gold chart. So prices is coming down, definitely bearish. So what do we do in a case like this? Prices are all the way down. Do we look to buy or do we look to sell, or what do we do? And this here is called Brown's bottom. Does anyone know why they call that Brown's bottom though? Just for interest sake. You can just type it in the message there. Ah, good. I knew Gavin is going to know it. Type his name in there for us, Gavin. Yeah, so it's because of Gordon Brown. The guy, as prices are coming all the way down, the guy decides to sell half of the UK's reserve treasury, half of Her Majesty the Queen's gold reserves. He sells it here right at the bottom. Yeah. And then that happens. So he sells it at $275 an ounce and then goes all the way up to today's prices of like $1,400 per ounce. So some still say that this is the worst ever investment decision ever. So there's some nice history around this. I'm not going to go into it, but I'm just trying to explain that prices are coming down all the way. Yeah. And then it's so difficult to start buying in an area, because we never know whether it's going to turn or whether this is just a, what a dead cat bounce is. I'll show you that later. You don't know if this is going to just bounce up and then continue going down. Obviously, if it's going down for 40 years, nobody's going to think of it turning. Yeah. So it was a very difficult decision. But obviously, he's been advised by investment bankers. He's been advised by central banks at the in this time. So it's not an easy thing, what we're doing, trying to find the turns and stuff in the markets. So I mean, if he gets it wrong, the investment banks gets it wrong. So don't be afraid if you get it wrong for a few times before you start getting it right. Yeah. So you can see the massive loss that is made. Then that covers the secular trends. It lasts for 25 years or so, 5 to 25 years, and we can spot that nicely on the weekly chart. Then we have primary trends, and these are the ones that I like. These are the ones we look at the daily chart. So if the daily chart is going up, if the trend is going up, then we would like to follow that upward trend. These sort of things last for a year or more. So you can spot these trends going for a year or more on the daily charts. Then what we have is your secondary trend. These are the money-making trends for us. These last for a few days or a few weeks. Yeah. So what we need to look at here is our 4-hourly chart. So it's like a top-down approach. Secular trend is the massive one. Primary trend is the intermediary. Then the secondary one is the one where we like to follow. So this one we look at on the 4-hourly chart. So that's the way Dow describes the trending markets. So now this is the thing, contemporary and classic schools of thought agrees where trends are concerned. All of them are looking for a high and then a higher high. But then this is just your beginning of an uptrend, because you're still going to need your low and your higher low in order to confirm that. But the thing is this now a confirmed trend, or is this still something that needs more confirmation? Let me just see what you guys have to say there. Is this a confirmed trend now, or do we still need some more confirmation? Okay. Jahirul says we need some more confirmation, yeah? Okay. So yes, we do. We need this last leg going up, and then it confirms the trend for everyone, the classic and the contemporary schools of thought. Everyone says, look, that's what we need. So the problem comes in here now, that as we are getting higher up, we are obviously getting closer and closer to our goal. Remember, we have this goal in mind when we take our trades. We are looking at this area over here to take some profits in. So we might have traded here without any confirmation that there is a trend, because we're saying that the trend only confirms itself here. So our risk to reward here is much, much less now. It would be so much nicer for us to get in over here and trade it all the way to here, because then our risk is that little, that bit is our risk, and our reward is this massive piece over here. Whereas this part, if you are conservative, you'll put your stop loss there. If you're a bit more risky, you'll put your stop over here, but your target is that piece there. Much smaller than this big piece over here. So the whole idea is that to try and get yourself into here is going to be more risky, because there's no confirmation of the trend yet. And here, when there is a trend confirmed, then it becomes so late for us to actually take the trade. So that is going to be our dilemma. And that is what the objectivity is going to try and remove for us. And it's also the reason we look for trend line breaks instead of a confirmation of the start of the trend. That will become a bit clearer later. So now in this case, we can draw our line, our trend line, and we have our 2 points here, 1, 2. and we draw our line. So anywhere on this line, we monitor this. We can look for stop ons anywhere on the line because we are assuming that the trend has now been formed. And anytime a trend touches this line, we can look for some sort of manipulation to go long. But all the while, we are getting closer and closer to the target, which means it's becoming less and less likely now that it's going to work. So the first area here is always going to be the better area to get in if we've missed this one. And this is the reason we do the trend line break on the daily chart, and the 4-hourly comes back down, touches a trend line perhaps, and then we have a nice long run here for our reward until it gets to the top. Before I go ahead, do you guys understand what I mean with trying to get into the first one here and not waiting for the confirmation at the end there? Okay, good. Yeah. Okay, so what does Elliott wave teach us with regards to a trend now? How can we use his teaching at all? We use his teaching in showing us the strength or the health of the trend. Yeah, is this trend nice and strong as it's going? Or because remember, we need to find that weakness so that when the trend has a possibility of now changing and breaking the trend line, then we have an opportunity to either trade the next range now, or the market is turning. Measure the strength of the trend. So in that way, we are also objectifying the trend. So what do we know so far about Elliott wave? So when Elliott talks about the trend, he has this. So now his trend is confirmed. But his major focus is on this wave here, on 2 to 3. So he says if this 2 to 3 line is the biggest line of this motive wave here, this big move up here, if 2 to 3 is the bigger, then you have a nice strong trend. So he says if the first leg goes up, and then you have your correction, and your third leg is only that small, yeah, and then your fourth leg or your fifth leg is also longer, that is your 2 to 3 wave here. This is the smallest of all of these compared to that one and that one. When it's going, this is our corrective waves, yeah, 3 and 4 and 1 and 2. 0 and 1 is our motive waves, and 2 to 3 and 4 to 5. So these lines are what we are measuring here. The lines going in the direction of the trend. These are the lines that we are looking at. So if 2 to 3 is smaller than the rest, he says that the actual trend is not a healthy trend. It's a weak trend. Do you understand that? So which means, what can we use this information for now? Remember, our strategy wants to find a trend line break. That's what we want in our strategy. Because if we have our trend going up and we've missed that, yeah. So what we're trying to do is trying to find the trend line that breaks. So, and then we look at this objectively and say, is this a healthy, strong trend or not? Then we can use Elliott and his school of thought and look at this third wave. Is it, if it's the shortest of the motive waves, then we can assume that there might be a turn coming soon and a break of that. Now, if we get a break of a trend line, yeah, then and we assume that it's weak thanks to that wave up there, Then we have a break of this trend line. Then we can call that our A. And then guess what? This is our retracement, which is the B. And then where do we enter? We're looking for our manipulation somewhere up there, and we're going down. We're getting our ABC there. But it all starts with, this is all assuming that we have missed our beginner strategy entry. Yeah, we've missed our beginner strategy entry up here when we were range trading from here. So this trend, so what we are trying to do constantly with these trends is finding out whether the trend is strong enough or whether it's weak, because we are looking for this break all the time. So the best way of finding this break is not only just looking and waiting for the actual break, but it's looking at the strength of the trend. And we're using Elliott wave for that. So if this is the shortest of your waves going in the direction of the trend, if your 2 to 3 is the shortest, then we can really start looking at an end of a trend here. Obviously, it's not always going to happen, but this is an objective way of trying to find that break as soon as possible. Because if we are anticipating the break, then we have a better chance of actually trading that break pullback. So this is your daily. It's coming down, you drop to the 4 hourly and you look for the retracement, the same as what the homework was. Then there is another thing that helps us with the strength of the trend. And this is what we call the momentum of the trend. Let's say this is a 21% retracement over there. And all of these waves are equal. All of these waves are equal. This one pulls back a 50%. So is the trend getting stronger or weaker? So that's my question to you guys quickly. On the chart here, is the trend getting stronger or weaker? It's getting weaker because of this retracements that are getting more and more. The sellers are becoming more and more powerful. At first, they were able only to push down to 21%. Here, they were pushing down to 50%, and then again, pushing down much further. So the trend is getting weaker. So what can we look for now in this trend? Yeah, we can look now for the trend to end. There is absolutely no guarantee that the trend is going to end. However, it is the best spot to look for it. If a trend is adhering to all the rules and regulations, we have a push up. We have a push up and down, and then a bigger push up. You see how Elliott agrees with Dow in this case here? He wants this wave, the 2 to 3 wave. He prefers that to be the longest wave, and then another push up. So if this is doing this, and the waves are becoming bigger and bigger, this means the strength of the trend is still there. It's intact. So when you get a pullback, then you can actually buy this pullback instead of looking for the break pullback, because the trend is strong. So these are all theories that they use, and I like using the Elliott wave and the Dow theory together like this to try and find the break of the trend line, so that I can be one of the first guys, if I've missed an opportunity, to get that break of the trend there and the pullback, because I've unfortunately missed the first opportunity. So I'll look for my trades here. So weakness in the trend is what we are looking for as trend traders. It sounds ridiculous, but that's what we're doing, because nobody wants to jump in on a late trade, because the trades are all the trends are confirmed so late that there's not enough room to take the profits. We are right at the top already, and the trend is only confirmed once it gets so close to it. Yeah. So that is why instead of waiting to trade the late trends here, we would like to trade either like the beginner strategy here, or at least when we are breaking that. So what we look for first is our strength of the trend. Is it a nice trend, a healthy trend, or is the trend getting weaker? If it's getting weaker, look for that break and look for that opportunity there. So the Dow theory stuff, Gavin, I'll explain that now. Now he's talking about the momentum of the trend. Each of these lines here is just a move up. Let's say they are all equal in length. Prices were able, the buyers are very strong in each of these, 1, 2, and 3. They are strong. Why? Because they are going up. But the problem is, how strong is the opponent? In this case, they were strong enough to push prices down to like 20%. Here they're pushing prices down to 50%, and here they're pushing down to 75%. So which means that this trend is strong, this one is weak, and this one here is the weakest. Because the opponents are able to push down. So the 5-wave theory is mute for this. Now you not really, because these are all within the waves. And you remember, the 5-wave theory is only just one of Elliott's definitions of a motive wave. Yeah, he has more. He has many others. I'm focusing only on one move up here. Do you understand this part of the pushing down? And that it's and the trend is becoming weaker. Yeah. Okay. And this means that now we can start looking for this break of the trend. And also you might think to yourself, you wanted to buy a pullback here, and then now you can decide, not to buy because you feel it's getting weaker and weaker. And then the other thing where momentum is concerned is the leg. So if this is your first leg and this is your second leg, if your second leg is shorter than the first, is your trend getting stronger or weaker? Say we get a pullback there now. So is your trend getting stronger or weaker here? Weaker, yes. Gavin, do you agree that the trend is getting weaker there? Yeah, okay, good stuff. Okay, so all we're doing is trying to find where this trend line might break so that we can wait for the break and the pullback. Okay, so now do we counter trend, or do we trade with the trend? That's another question to you guys quickly. Do we counter trend, or do we trade with the trend? I'm going to try and put this to you now. Yeah. Don't counter trend like ever. In the very beginning of this, we mentioned the various types of trends, the secular and the primary and the secondary. Let's take out the secular trends. That's the ones for 25 years. But let's concentrate on the secondary and the primary trend. I would like us to only trade based on the primary trend. So if the primary trend is going down, never trade against that trend. That is something I would like you to try. Try and work out what the primary trend is. This is the one that lasts for like a year or 6 months to a year. Look at it on the daily chart. So in this example, we can all see that this trend is going down. So we don't want to trade against that downward trend ever. That's what I'm trying to put to you guys. Yeah. Most of the profitable traders that I know, they trade on the alongside the trend. There are guys who trades against the trend and are very profitable, but most of the guys that I know who are consistently profitable are trading alongside the trend. And when we talk about alongside the trend, we're talking about the primary trend, the one that we're finding on the daily chart here. So all these terminologies and stuff is just there so that we can be on the same page. If I say daily primary trend, then everyone knows what I'm talking about. Yeah. So this is our primary trend coming on the daily. But if we have a look at what is going on, this is the upward movement on that 4-hourly chart. So it would seem as if we are trading against this trend because we want to go short based on what we saw on the daily. So this move up here is being highlighted over here. Yeah. So we are trading against this. We are counter trend trading on the 4-hourly in the hopes of getting a very good price on the daily chart. So we want the guys on the 4-hourly to seem as if we are trending and that we are constantly trending. We want these guys going up and up so that we can get a better price all the time on the daily chart. So if we look at the trend and the weakness of the trend and the health of this 4-hourly trend, we can try and find a break here and see what happens. This is our first leg here going up, yeah? And it's come down and it's come down to 50%. And then we have a nice and strong move up, which is longer than the first move up here. So it's still very healthy. But it does come down even further. The retracement is more. Here we can see the second leg, it comes down to close to the 61.8. So the retracement comes down. The sellers are getting even stronger in this case here. So the sellers are getting stronger in this case, and then even stronger on the third move up, if we go up here. So they're getting stronger. It's almost down to the 78.6. So the sellers are getting much stronger now. And if we go back to what we want to do in the first place, we want to sell anyway. So there's a trend going up here on the 4-hourly, and we notice it's getting weaker. So this is our daily. The trend is getting weaker on the 4-hourly. We watch for this break. So all over in this downward trend, that is what we are looking for. We are looking on the 4-hourly for weakness in a trend. So this trend is getting weaker and weaker with analysis used from the Dow theory and the momentum strategies of Dow theory, and then also the Elliott wave theory as well. So any sort of weakness, look for those to find out whether we are getting closer and closer to the potential break of the trend. Here we can see the trend, the sellers are very strong, it pushes it all the way down. So the possibility of pushing it right through is there. Yeah. Okay, so the cable. I like the history of this, why they call it the cable. It's just because they traded the... Oh, cable is the pound versus the dollar only. It's not the pound versus Swiss franc or the pound versus anything else. It's just the pound versus dollar. And they call it cable because it was the most traded currency during the age when this telegraph thing came out. Right, so let us just go to the chart on the pound versus the dollar quickly. Okay, so what we have here is a trend going down. Do you see my chart, guys? Okay, so we have a trend line going down here. We can see this is going down. So we would like to trade short, but notice that we are looking at the secular trend, the weekly. It's always better to have the secular trend and the primary trend going in the same direction, but in this case it's not, because secularly we are looking and we see that there's about 5 years here of worth of information, and it's been trending downward since this period here. So it's always better to find trades where both is going in the same direction. But if not, you can look at the weekly for your support and resistance lines like this here. That would be now an area to look for to take profits. Yeah, that there, and this is an area where we could have bounced off from. So what we have here is an opportunity. If prices decides to stay in this trend here going up, then what we have is a 475 pip opportunity. Yeah. So how do I come on with trading it long? Why would I want to trade this long? Okay, so one of the reasons there, I'm going down to the daily now, is because when we get this crossover of our EMAs, the 12 crossing over 36, and at the same time we're also getting a trend line that's breaking, then we can definitely look to trade now in the other direction. You can start looking at trading the other direction. So from the daily, we get our break here. And I think you should write this down, that it's always going to be better to get a trend line break together with your EMA crosses as well. So what do we have here? We have our targets that we've got from our weekly chart. So this is, nice and a nice distance away, like 1,000 pips to that target there. So that is a decent risk to reward. So watch out for the break of the trend line and the EMA cross. And then if we zoom in on that area there, that is where we will start looking to trade it long now. There. Let me just clear up this chart a bit. So that was our trend line break, and it came together with our EMA cross there. And if we go further across here, we can look at this again. There is like a trend line break there, and then it breaks here, but there's no cross yet. And then here we see the crosses happened already. So we can adjust that now to that. Do you see that? We have a cross and a break. Always going to be better. And then what we have after this cross and the break, what we also have is, a trend line that we could draw coming down. Always try drawing the trends together with your EMAs. So what do we have here? We have our break coming through, and then we have a pullback here. and we can start looking to trade there. So all that we're doing so far is looking for opportunities to trade. The other way of finding trading opportunities is you're looking for prices now to come down, because you're assuming that there's a trend. So you want this price to come further down than that low there now. And then you want it to push up. So you can take this trade here too and look for an opportunity here, there. Because this would be a volatile trend. Prices are not able to go all the way back up to the 36, but it comes to the 12, it tests the 12, and then you look for a manipulation there to go short. And then you can also, these are all higher risk. The better one for me has always been the 36 EMA. So when prices come, so I wouldn't bother looking for that. I would look for the push all the way down and the pullback towards the 36. For me, this one has always been the nicer one. But there's nothing wrong in trading a lower risk looking at the 12 EMA. There's a question here quickly. Yeah. I like looking at trades because there have been so many where the weekly is just in line with the daily. The primary trend is together with the secondary, are you saying primary and secondary? No, the secondary trend is the one that goes against the idea. So if your idea is going short, like in this case, you drop to the 4 hourly and look for weakness in this trend going up toward that line. So your idea is to trade short here, Gavin. So you would drop to the 4 hourly and look closely for weakness of this trend here. Sorry, you'd look for weakness in that trend going up there. There. So the trend line is becoming weak on the daily, yeah? And then you get there's a cross and breaks. And then you're looking for a nice pullback. Looking for weakness in this trend on a lower time frame, like the 4 hourly, and then you're looking for your entry up here. So all we're doing so far is looking for entries. We're not, you can use the beginner strategy entry and all of these levels. And also the next week we're going to cover the actual entries. For now, what we're trying to do is find more opportunities to trade. So far we know that we're going to trade after the trend line breaks and we get a pullback either towards a trend line or the pullback comes as far as the 12 EMA, or in this case here, the pullback comes all the way back to the 36 EMA. And if all of these things are lining up, then you have a better chance of the trade actually being a success. So it's a weakness of this trend is what we're looking for, and then a sell. And the further down toward your target it goes, the less likely of a good trade. Yeah, because if you drop to your weekly now, if things are going south here, then your target is going to be somewhere in this area there. So the closer you get to this area, the less likely of a good trade it is. Yeah. So the sooner you get it, the better. This is the reason we like using a trend line break. And then the first time it ever comes up and retraces, and we look for that opportunity. This is where I put most of my positions in on. And then anything after this, it's just, profits that I've taken from the trade that happened here already. When the wave count for me, I'm not really counting any waves. I'm looking at this as a trend line going up, yeah, and then there's a break of a trend line, yeah. I want to see a confirmed trend being broken, though. That would be nice. And then when it comes to the entry, I'm looking for this weakness again in this trend here. So if we let us drop to the 4-hourly and see. So this here is it's in April, yeah, 25th of April. Yeah, do you see that trend? So we're looking for some sort of weakness in this trend here. The reason for the weakness is just so that you can be on alert that the trend line might be broke now. I'm just reading the questions here. Let us look at this one at the most current one, yeah? I'm going to take an example on this most current one. Okay. If we look at this here, yeah, we have a trend line that's breaking here, yeah. There's a trend line coming down and it's breaking here. So what we're doing is we looking for an opportunity to go in after this trend line is broken. So we look for weakness here so that we can be an alert when this happens here. Okay, Jahiru asked, what is the weakness of this year? Yeah, so this one we use more technical analysis because if we look at the weakness there, yeah, and what happened here, we can see that these are definitely going to be diverged here. It's not, if we do put an RSI on there, I can like guarantee that that is going to be a divergence there instead of counting any sort of wave. The same look here. Look at that. It looks exactly the same. They look like twins. There's a trend line that breaks there, and then there's a cross of an EMA, and then there's a retracement back, and then here the same thing happens. You get a break, and it comes down there, and then we start looking at the first opportunity for a after a retracement. In this case, the first opportunity happens on the 12 EMA. In this case here, there is a little bit of a mess up situation there, but that's also how we would have looked at that one. So any weakness, that's what I'm saying here. If you don't find it in Elliott wave, you don't find it in Dow theory, then you use the RSI for weakness in a trend. And what else? Yeah, I think those are the three main ways of trying to identify a possible end of a trend. You need to remember that the end of a trend doesn't mean it's going to change the direction now from long to short or from short to long. It could mean also that it ends the trend and it now starts to range. So what we're doing is trying to anticipate the change. If it happens, if there's a break of the trend line, then it's then the trend line is broken. Then you can start looking for the entries and stuff. But it doesn't mean it's going to change direction and go into the new direction now. But what we are looking for in an area like this is that for some weakness so that it can cross over and so that we can trade. And here, when it's coming down, what we're looking for is some sort of weakness. Yeah. If you find another weakness here, then you can do it. You can say that this is my last leg here, and compare that to the previous leg. The last leg was shorter than the previous leg. So which means we could use momentum theory here as well. Jahiru, that plus your RSI. The more confluence you have that it's getting weaker, the better. Do you understand that? So in this end of trend, we have two reasons. We have the RSI confirm, and we have the last leg, which has not been yeah, okay, could you understand that one? And then also we can look at the barriers. We can look at support and resistance at the area where the trend might change. So there are various things. So all the knowledge that you have that that a trend could end, use that knowledge to find out where you want this break, because it's where this break happens is where we want to be. 13th of September. Let's drop to that one. 13th there. Let's remove this RSI. 13th of September. Yeah. Do you see that? That was the break that we've been waiting for. And then the first sort of break pullback is what we want. You see this part was highlighted. So the first one, in this case, it comes down all the way to the 36 EMA. So what we're doing is looking for opportunities there. And then where are we looking for another opportunity? There. And then where are we looking for another opportunity? Every single pullback that comes toward a 36 EMA or a trend line or a confluence of trend line is what we're looking at. Do you understand? We want the first one after the break much, much better than the rest, because we've missed the first opportunity and we like to try and get that second one. If we've missed the first one and the second one and it's just getting closer and closer to a target on top here, yeah, then it becomes not worth it anymore. Our target is up here. Yeah. Remember if we traded this one, look how nice our stop was placed. Yeah, our stop was placed below this area here. Look at our massive reward that we have compared to trading it closer and closer to our potential target that we found on the weekly chart. So the weekly chart is there to help us with the secular trend, and it's there to help us with the targets and the possible entries. But it's this daily chart direction that we want to be in. We want to be in this primary trend direction. That would be very nice. Yeah. So the pullbacks and stuff should be the trend that we are looking at. getting weaker and weaker and weaker. Let's see. Do you have any further questions on that? Okay, good. So the first break of a daily trend line, you're looking for a pullback and then a possible entry. That's always going to be your best bet. And if you've missed that first one, then the next best thing is to go for the second one. So if we look at this, this was our trend line break here, and we found that on the 4-hourly. We found this one on the 4-hourly, right? But then we get a massive one that goes up and then down again. Then we can start looking for another trade in this area. So this is my first one. After the break, you can jump down to the 4-hourly and look for an opportunity there. But if you've missed that, you wait for a big move up and down. And then you look for another opportunity there. And then when this happens, you can look on the hourly chart for an opportunity. The closer and closer we get to the target, then we need to drop down to a different time frame to get into the trade. But I think we're going to leave that for another time when we do the entries. I just want to show you where to try and find the entries for now, just to where you can spot possible entries on. Let me just see, there's a question. You mean the cable pound versus dollar now? Justin, pound versus dollar. Sorry, pound versus dollar. Yeah, now this is not a trend, is it? This recent action here is more like a wedge. What you can do with these sort of stuff is then look just for the breakouts of this. So you look for the breakout of that and the pullback. And then you look for the opportunity over here for the stop hunt. And in this case here, you're looking for the break going short and then the pullback here and looking for the opportunity somewhere there. But you see, it becomes complicated. So why not just look for something that fits the criteria better? If it's not trending, I mentioned earlier on when we did this, I mentioned that the trend trading strategy works when the market is trending. So identify some sort of a trend like this one and that it's broken, and then you look. Like this one is going to be very difficult. Look at the strong move up here, yeah? This move is stronger than this one, yeah? And the most recent pullbacks are shorter, which doesn't show that the trend is getting any weaker. So I don't want to look for a weakness of a trendy line here. I'll look at something else. Yeah, so our legs here are getting strong. It's strong. So the most current upward move is bigger than the last upward move, indicates that it's strong. Doesn't mean it's not going to turn here. But if it does, then my reward is probably going to be in this line. So I'll be looking at the lower time frames to try and get myself into that trade. Yeah. Yeah, that's why I don't like this one. This one you can trade the other strategy instead. Because on the weekly, this is how it looks on the weekly, very close to your resistance there. So we'll wait and see what happens here. Yeah. But do you see what the power of what the weekly is giving us here now? Yeah. The weekly says it's going up because it's got the cross there, and it's the trends are looking strong. The only thing that stands against it here is this barrier here. If you count the number of weeks that it's been hitting this barrier, it's 1, 2, 3, 4, 5. This is the 5th week now, so it's a month worth of data that cannot break this. So the chances of me going long and breaking this, I want something that's going to happen or has a better chance of happening. If it hasn't happened in 5 weeks, why should it happen just when I, decide to get into the trade? It hasn't happened for 5 weeks. So in this case, I'll wait, and for the market to decide here what's going to happen. There's no clear direction here. If it gives me a clear direction, then I'll go for it. But at the moment, it's not. And it's in this wedge. If you get a stop on below, nice. You can try and get it to there. Yeah, try and look for a stop on below here and get your targets up there. Yeah, it's in a massive downward trend also. So you can build a case to let it, to trade it short because it's below the 200. And if you can try and draw a trend line there. So this is the reason that all of these things are stuck here. Yeah, nobody knows, especially when it's in a wedge, nobody knows really which way it's going to go. We can look for stop-ons either way and then decide to trade in the direction of the stop on, or you can trade it going short. But if you look at the short moves, it's just much bigger. Yeah, it's bigger than the longs there. So it's a complicated chart there. Like if we look a little bit previously, we get a break there and a pullback, right? And then we have our 1, 2, 3 touches. Then it's so easy. We can just see we'll trade there, and there. Yeah. And then it breaks here. Then we decide to trade short again. Do you see? But here it becomes more difficult now. So therefore, we need to choose the charts that looks nice on the, or choose the charts that are looking good to us. If we can see this pattern after a break, then it's nice. And then the second one and the third one, it's clear and nice. But here it becomes difficult now. But if we do get this, if we get that move now and it comes back down here, and then we can really start looking at going up and following that trend. But it doesn't look like this right now. So we wait. Do you understand? We have this 28 different pairs, so we need to look at them and see which ones fits the criteria the best. Okay, so let me just do this. Okay, so when does the trend actually end now? Nobody's going to know that. Now, what we are trying to achieve here and what we are trying to look at is this. When a trend is going down, yeah, and then it makes as if it's going up, and it looks as if we're going to be able to continue that. That's what they call a dead cat bounce. Yeah, but we can really only know this in hindsight. Yeah, whether that is when this happens. Let me show you the next one. There we go. See, it makes as if price is going up and then it comes back down again. So this is the main portion of the trend. If prices are moving up, if prices are going up and it's doing the higher highs, yeah. So and then it comes down like this. And then what would you do in this situation over here? What would you do here if it does that? Seeing that we have this going 1, 2, 3, and it's, it's really doing that now. And this is a confirmed trend. Now, the thing is, if we're looking at this, what we need to understand always when looking at a trend is looking at this high and who has actually put in that high. And looking at the major trend. But if we're only on one single chart here, then this here becomes a massive problem. If this guy is broken, he's the one that put prices, who's made a new high up here. So if he is in jeopardy, then this trend could be the one that goes all the way down. So perhaps looking for a close there and the pullback, and then pulling the trigger there is very conservative. Very conservative. So always look at the highs. So this is a confirmed uptrend. And if we look at this and then the line is broken there, right? And we're having a break and a pullback. So this is a go ahead for us. Yeah. So it is always going to be higher risk than the trades down here, because the one who put in this new high is still available. He's still strong there. He's waiting for prices to get to here and then maybe doing a stop hunt, or maybe he's too weak to push the prices back up again. So we never know. But always have a look at the traders that put in the most recent high. Yeah. So prices are going up. This is the guy that needs to be taken out before we are 100%, or not 100%, you are more confirmed that this thing is still going to go up. So this is the idea that we also trade sometimes. But we were looking at this guy here who's put in the most recent high. So here, prices are going up. And you can look for a stop hunt in this area to go long. This is all now contrary to the trend line break thing. It's to make you think that it doesn't always, that a strategy is not always going to work. So this could be one of the times when it doesn't work. If it could do any of the two, yeah. Because we need to concern ourselves with this guy who's actually put the price in high. Yeah? Do you understand that portion? And this is what I mean when we say we can always be in some sort of an idea. Yeah, you can have the idea to trade it long there, and then your first 1, 2, 3 there. But when it comes up to the close to your levels and stuff, yeah, you look for weakness. If it happens, you can trade it short, and with good risk management, you can always make money in the long run. But you have to watch out for what happens here, because remember, the guys who's playing in this area they might want to push prices all the way up there, and you've changed your direction here. So just think and look at all these little things. This is the reason why doing an analysis on a chart can never last. It can't be like a 5-minute thing. People who pulls the trigger that are worth millions, they are doing proper analysis on the chart. This is only just technical here. They've got the fundamental department as well. So don't get trigger happy with any sort of strategy or any sort of a thing. It's all got to do with the statistics, the probability that it's going to work or not. If prices are going up in a long trend, this is a very nice spot to start stop hunting, because this guy here is interested in getting the price all the way up there. But if this trend is getting weaker and weaker and weaker, and then your chances of pulling the trigger and making it go short is better. Your chances are better if this trend is getting weaker. So trend analysis with Elliott wave and the momentum, and looking for any weakness, looking for the breaks, and also looking at the most previous buyers in this case, who's put in the highest high there. Okay, guys, do you have any questions on any of the stuff that we spoke about? I think there's a lot here. But before we do the actual entries, I think that this is important to get a proper grasp on. Okay. So the whole thing, if I just draw it very quickly for us, the whole system is looking for opportunities to trade. Looking there and here. We've identified this whole thing on the weekly chart. We know where we want to trade, thanks to the weekly. And the daily, we know in the direction we want to trade in. And on the 4-hourly, if we know that we want to go long, then we want to trade against this 4-hourly trend here. So it's coming down, we want to trade there. It's coming down, we want to trade there. It's coming down there. This is on the H4. This big move here going up, we want to follow them on the daily. And if there's a qualified trend going along here, and we see that the last of it is messing around, it's getting weaker for whatever reason, momentum or Elliott wave confirmation or RSI, stuff is getting not as healthy as they were a few days ago. Things are getting weak. Then we can look at that. We can look for this and pull back on the 4-hourly and then just start the whole thing going down again. Bear in mind the guy who's put in that high. He's got other ideas, yeah. Very important spot to watch. You could look for the stop on to continue it going up as well. But that is what we're doing. We are looking to trade here. The probabilities are high that you're going to make money in this market if you're looking in the right places. The nice thing about it is that you are not looking and just buying. You are looking for another pattern, another confirmation that prices are going to go up. So you're never trading without a manipulation. So instead of trading just here and just here, this is Gavin's favorite spot to trade. Right, Gavin? This one. You love this one, don't you? Oh, Gavin is gone. Oh, these. Yeah. So Gavin likes this spot. But I'm telling Gavin quickly that he needs to look to the left and just see who put in the highest high there and then look in that area. But if it does it here, it's not it doesn't stand a better chance, you know. It stands a better chance if it happens here. Right, so we're finding opportunities to trade. Now, next time we're going to show you how the actual opportunities looks like. Yeah, but all of them are trend continuation stop ons because we've identified it on the daily now. But here you're doing it, you're hoping that it's going to break that massive barrier that you've identified, Gavin. So this is a trend and you're hoping it continues. So you're looking for continuation pattern here, and all over. Here you're looking for a continuation and you want this guy to be strong enough to even break this barrier. But what I'm saying is look at the guy who's put in the high. Here is your barrier. Yeah, it's coming toward that price and it's going up. And it's been a strong upward move, and then here, yeah. And then that sort of thing happens. If you can do it at an area of importance, like it's done this now, and then there is where I'm talking about. Instead of just anywhere, nothing to the left. Look for that on the left for it to happen. And the most important person or group of traders is this guy. Because this is always long, really, until he's removed from the market. So when we take our trend line break here, we are actually going against this guy. So we need to be wary and concerned here. But if trend is becoming weaker and weaker and weaker, then we have a better chance of that break actually working out. So those are the things that we need to start thinking about now, other than just 1 to 3 sort of patterns. Think of the weakness of that trend. Think of, will that weakness end up in taking this guy out? Yeah. So that's my story for today. Okay, I'm going to send you the homework in the chat room as per usual, and then we'll talk about it individually again. And then if you come up with any sort of questions, then we can go over it. Does that sound good, guys? Okay, let's see. Just reading out. Okay. So did you find anything of value different here than what you would have thought of on normal trending and stuff? Looking at the momentum and the strength of the trend for that weakness, for the break. That's the important. And the guy who's actually putting the high, that's important. So that together with any sort of stop on knowledge should really give you an edge in this market now, because of those areas that you will notice that the areas that we are looking at is important. Historically, go through the chart and see how the importance of that area, and then coupled with the knowledge of stop hunts and different entries, then we can make some profits here. Okay, guys, I'm going to leave you and leave you to ponder on that. I think this one was maybe a lot. Yeah. So thanks a lot for joining, guys. Cheers. Bye bye.